So let me, without further ado, take you through the key highlights for the year. The bank as a whole, the group as a whole, as you may be aware, comprises of the commercial bank and then the group of subsidiaries which consists of the NDB capital embracing the wealth management, stock brokering, and the corporate finance arm, with also an investment in Bangladesh and our property development subsidiary, the Development Holdings Limited, together with the commercial bank. For the full year, the bank or the group generated an after-tax profit of 2.7 billion rupees. In terms of total assets, the group crossed the 200 billion milestone, which was a very important part of an overall medium-term strategy. As of today, our market share in terms of funds under management is around 3.4%. The bank is currently rated internationally by S&P at B+ and by Fitch locally as AA-. In terms of domestic footprint, the commercial bank, is supported by a branch franchise of 79 units. The group's results have been very effectively supported by the ability of cross-selling various products and services across the entire spectrum of the bank. As you know, NDB started its life as a development financial institution and about 10 years ago successfully transformed as a commercial bank. And today, our belief of development encapsulates all segments of Sri Lankan society, from the small scale individual to an entrepreneur, to a small to middle scale business enterprise, to the emerging corporate, and to the very large listed institutions who all have a role to play in the country's economic resurgence. And the way we look at development finance is not just to deploy long-term project financing. Our understanding is to first empower the individual by even looking at things like his housing requirements through retail housing offerings, looking at the savings solutions as the income levels grow up, and then get into the small and medium entrepreneurship by giving hand-holding, valuable financial advisory services in addition to deploying the balance sheet, and then to look at the next generation of emerging Sri Lankan corporates, and finally to also look at the large listed groups as they go after the next wave of development, both locally and internationally. So in that process, we have the entire subsidiary group also supporting the commercial bank in cross-selling, and that has made a huge impact. In summary, if I can just amplify 4 or 5 examples of cross-selling, we have the project financing and infrastructure development contributing to just over 10% of your gross income. The corporate banking group contributing to around 32% of gross income. the SME and retail portfolio accounting for around 32% of gross income, and then the treasury supporting around 17%, while bank assurance, the new kid on the block, is yet to make its mark, as at the full year 2013, it has accounted for just around 20 basis points of total gross income, which certainly has a huge upside over the next 4 to 5 years. And the capital markets part of the group has contributed around 8% of gross income. So if you look at the bank per se, the basic business which comes from the net interest income has shown a 20% jump during 2013, across the 7 billion mark. The profit for shareholders has shown a 70% decline to 2.64 billion. As you would be aware, the 70% decline is because of the exception of 6 billion, which was a capital gain from the sale of NDB Aviva to AIA. So when that is adjusted, you see this decline. The loans and advances have shown impressive 18% rise during the year, which I believe is more than double that of the industry average. The deposits, customer deposits, have increased by 21%, which again I believe is higher than the industry average of around 15%. Your bank is capitalized at 21% in terms of the Tier 1 and Tier 2, which is one of the strongest in the industry, which I think positions NDB as one of the strongest capitalized banks with the opportunity to take on its more than its share in nation building in the next few years. In terms of the more specific performance, again, you will see the net interest income of the bank showing a 20% even after adjusting for exceptions. Other income shows a 48% growth adjusted for exceptions. The impairment charge has shown a significant growth from last year, mainly on account of the collective impairment improvement. So we have provided around 1.2 billion this year, including the collective impairment. As a percentage, I think the non-performing asset is around 2.48%, which is still well below the industry average, which I believe is just over 5%. Your net interest income, net operating income, once adjusted for exceptions, shows a 15% growth. That is once you adjust for the capital gain of 5.75 billion of the divestment of Aviva. And the profit after tax shows a 7% growth once adjusted for exceptions. The taxation shows a 9% increase, and the final profit after tax attributable to ordinary shareholders, once adjusted for exceptions, shows a slight dip of 8% against the last year. Against this context, our overheads, despite open